Welcome. We're going to talk about selling options on gold. It's the happy marriage of two fairly conservative investing strategies. Buy and hold gold, make some extra income by selling options on your gold. But first, let's spend a minute on why you might or might not want to own gold. The pros of owning gold. It's a store of value like Bitcoin with less volatility. If you want to squirrel away some of your wealth, then it's probably a better alternative than putting your cash under a mattress. It's been a currency in the past and a means of trade, but not so much anymore. Many think it's an inflation hedge, good to hold during high inflation, but history has shown this is debatable. And finally, it's not the worst way to add a little diversity to your portfolio. Now for the cons. It looks pretty, but doesn't have a lot of utility other than jewelry and a few industrial applications. Your gold won't have a balance sheet or income statement, and it's not going to pay you a dividend or buy back shares. So its intrinsic value is pretty much whatever someone else is willing to pay for it. It has no earnings and it doesn't grow. In fact, you could say your portion of gold shrinks as more gold is mined every year, diluting your holdings. Here's an article about what Warren Buffett thinks of gold. It's linked in the description. Check it out. Spoiler, he does not invest in gold. Enough about whether to invest in gold. Let's assume you decide to get some and talk about selling options on it. As noted earlier, gold usually has lower volatility than Bitcoin and many stocks, so you're not going to get as much premium when selling options on gold. But this indicates that it will probably not move around as much and be less risky. So you can sleep better at night if you're risk averse. Depending on how you own gold, you may be able to sell options on it to make a little extra income. But keep in mind that selling these options will have the same risks as selling options on stocks or ETFs. See my videos linked in the description to better understand these risks. If you're interested in owning some gold and would like to sell options on your gold holdings, there are a few ways to do it. There are ETFs that track the price of gold and other gold instruments correlated to the price of gold, like gold miner ETFs. I've chosen to own a little bit of gold using the IAU ETF, Exchange Traded Fund. I chose IAU because it has a slightly higher return than GLD, closely tracks the price of gold, and has fairly liquid options. The link to this page I'm showing is posted in the description for a comparison of IAU versus GLD. Here's all my transactions over the last 18 months. I collected $700 in premium on a $7,000 investment. That's 10% in premium in 18 months, from May 2020 through December of 2023. But that's underestimating my return. It doesn't count the underlying IAU appreciation. We'll take a more detailed look at my returns in a bit. You can count your premium as either income or use it to lower your cost basis, but not both. It's up to you on how you'd prefer to account for your premium. Keep in mind that if your gold options are in a taxable account, then you'll have to take gains and losses for taxes after closing or rolling each option. Now we're going to look at these transactions on an annotated chart to see how each one affected my cost basis and cost basis per share. Then we'll talk about my return, annualized yield for this investment, and compare it to just owning the ETF without selling options. But first, if you're enjoying this content, please consider liking and subscribing. Here's the chart. I started selling puts on IAU here in May of 2022, May, June, July, August, and so forth. These green lines show I sold a put here, collected $69, and then I rolled it twice for $81 and $57 credit rolls. So I ended up collecting a total of $207 premium if you add these three up. Then I got assigned in August at $35 a share, 200 shares. I'm not going to go into the details of why I made each one of these transactions, My purpose in this video is to just give an example of selling options on gold, not to explain the details of selling and rolling puts and calls. See my other videos for that. So I was assigned 200 shares right here, middle of August, at $35 a share. That's a $7,000 investment in IAU. My cost basis per share at this point, before I started selling calls, was the $35 minus the $207 I received in put premium, or just over $1 per share. So my cost basis was $33.96 to be precise, just under $34 at this point. That's the start of this yellow cost basis line. Notice it slopes down after selling each call and each credit roll. I only started computing my cost basis after I was assigned the 200 shares. You can see IAU was around $33 per share when I was assigned right here. So I was down on my investment then by about $1 per share. But I was better off than if I would have just bought the shares back here without selling options. I would have bought it at about 35.2 instead of having a $34 cost basis with options. So then I started selling calls. The calls and the rolling of calls are the blue lines. You can see my cost basis continued to slope down with each sold call and credit roll. That's this gold line. Then in late November of 2023, this blue line here, I decided I wanted to liquidate my IAU positions before the end of the year to claim the gains on this year's taxes. That's why I rolled down and in. I rolled down from 38 to 37 and in from somewhere out here back to December. So that takes us to today, Sunday, December 10th, in between this blue line and red line. I'm just waiting to see what happens on December 15th. I'm hoping stock stays above 37 and gets called away. The option delta is telling me there's a 93% chance it'll get called away. My final cost basis will be 31.5 right there as of December 15th market close. This makes sense. Recall I've made $700 in premium, if you add up all these premium numbers, on 200 shares, selling and rolling 2 contracts. This means I made $350 per contract, or $3.50 per share. The original purchase price was $35. 35 minus 3.5 is 31.5. That's my cost basis. So what's my annualized return, assuming it gets called away at $37 per share? Here's a simplified formula for computing annualized yield from one of my episodes, linked in the description. You've got profit divided by collateral, which is the yield without considering time. And then you have 365 divided by days, which just normalizes the time to a year. So my profit is the number of shares times the profit per share. I've got 200 shares, and my cost basis was 31.5. So my profit per share was 5.5. So 200 times 5.5 gives an $1,100 profit. And the collateral was $7,000. When I got assigned, I had to buy 200 shares at $35 each. I sold options and held IAU for 561 days. That's from May of 2022 through December of 2023. Normalizing the time to years, I get 0.65, or 1 year is 0.65 of the time that I held this investment. So the annualized yield ends up working out to this, which equals 10.21%. So what if I'd not sold any options and just bought and held IAU over this time? Let's make some assumptions about the price I would have bought and sold. Let's say I would have bought the same day I sold the first put. The price was 35.2, and I'll sell on December 15th. And let's say IAU stays at its current price for a week, 37.9. So that'd be a profit of $2.70 per share, $540 overall. Plug that into the formula, and we get about 5%. So selling options in this case has more than doubled my returns. For the record, you can't count on option selling doubling your returns. This is an example that worked in the favor of selling options. There are many examples where selling options will hurt your returns. This usually happens when the underlying stock, or Gold ETF, goes up faster than the premium you're collecting. Selling options works best if you can get assigned on a put at a price not too far below your strike, and then the stock slowly moves up, letting you capture all the stock price appreciation as well as the call premium. And selling option helps when your stocks are falling. The premium won't be able to keep up with the amount you're losing as your stocks fall, but it will cushion the blow a little bit. And that's a wrap. If you enjoyed this content, please consider liking and subscribing. Let me know what you think. What are your thoughts on owning gold and selling options on it? How do you own your gold? ETF? Bank vault? In your teeth? I really appreciate any feedback or comments. I'm not a financial advisor. This wasn't financial advice. This was me sharing my thoughts on gold and selling options on it. Have a profitable day.